And welcome everyone. We are live sitting down today in Budapest. It changes every week, but I try to keep the same, say it right, but Budapest, yeah. And Mandi is back, so that's pretty awesome. Welcome, Mandi.
Thank you, Etienne. It's so good to be live back with you. So many traders ask, how come you stopped doing your live? And we've just been both really busy. You with your traveling and building your academy. And me, I went on a professional development training that I have to do to keep up my qualifications, and also started my my online group, the Fierce 10. So we both have been so busy, but yeah, it's good to be back.
Awesome. So I'm guessing about maybe 20 to 30% of people watching this won't know who we are at all. So just introduce yourself, tell people who you are, what you do, and a bit of background about yourself.
Okay, so I am a trader and also helping traders with their mindset. So I'm doing the coaching. Been trading forever. Since 2000, I have been trading, and for me, the first 6-7 years were just really, really tough to make it in trading or to even get close to break even. And part of that was really me diving deep into my mindset and looking at what's stopping me, why I was sabotaging myself, and why I just wasn't able to consistently perform in the market. So this has been a great part of my journey. And then from then on, I had a lunch with someone who was working at Borstada. His name is David Galtieri. And we were talking about trading mindset, and he said, wow, we need someone like you. And he sent me on a tour around Australia and teaching trading mindset. It was in 2007. So we were a group of 4 who were running seminars and workshops around Australia. It was in 2007. There's not many seminars happening anymore. It's all online. But yeah, that's how I kicked off my career as a trading coach, and developed from there. So now, 18 years later, I'm here with you, Etienne, and we do YouTube lives and helping traders with their questions, I guess.
Wonderful. So a couple of us live comment in the chat. I know we have Robinson, we have Chris, and someone else. That's perfect. So if you have any question at any time during this live event, comment below in the chat. If you have a question after you're watching the replay, comment below in the comments as well. We want to make sure we answer your question even after the event is done, because that's always useful. And so Mandi wants to talk about how to survive and thrive in tough markets. Like, those times where like things don't go well necessarily, how to survive and how to push against that and how to move forward. So I don't know where you want to take this, Mandi, where you want to start and everything, but we'll talk more about your program at the end. For now, let's cover the content. And so where do you want to take this?
So I'm sure you had the same feedback, Etienne, but a lot of traders on Twitter, and also I get their emails, they say, this market is so tough. Up one day, down the next. Those, Trump tweets set the market into either skyrocketing or dropping, plus it's reporting season. So I know a lot of traders who are challenged at the moment. Now, there's also traders like myself. I love this market because I'm a short-term scalper, and the volatility is really working for me. Like, the Dow moves 100 points in like 5 minutes. It's like heaven. So I remember those times before the GFC. And after the GFC, there was nothing happening anymore. The markets were dead. And now we are back to how the markets used to move. And it's just so much fun. But position traders, they're finding it, or even swing traders, they find it incredibly hard because the market's just up and down all the time. The same with the FX markets, because the US dollar is influenced so severely, especially with the Trump tweets as well. A lot of FX traders found it hard to find their rhythm and to keep trading.
And
So
that's a very good point to add to that, because I found it very hard a few months ago, and I really had to adapt. I had to change some things to be able to keep trading for sure. So yeah, that's definitely a good point. We can jump more into that later, like how to change what I changed. But yeah, that's a really good point here.
And that is exactly it. It's about being nimble and recognizing that the markets are not what they used to be. The markets have changed tremendously at their core. So if you look at the market behavior a year ago, very, very different to what they are today. And so when we have challenging times in the markets, what I see a lot, people on Twitter saying, oh, that they're going to sit it out. They give up this year. I had this really big drawdown. I'm going to give up now. And that is not helping. If you want to learn and grow as a trader, you have to be grateful for those times, because that's when you find out what you're made of. In those moments when the market is tough and you keep persevering and finding out what it is that you need to adjust. You need to adjust your skill set as a trader in terms of how to read the market. You need to adjust yourself, your personality style, your behavioral style, and really push through those frustrating moments, those challenging moments. Because what happens is that traders, when the market goes crazy, they start feeling helpless. They start feeling that they're losing control. And for many traders, that is connected with fear. They're afraid of losing control. And rather than going with the swing of the markets and being nimble, they become very rigid and very, very stiff and very rules focused. But that's the moment when rules don't work. Markets, as volatile as they are right now, the more rigid you are, the harder you will find it to perform in the market. So it's all about adjusting and being nimble and stepping back and looking at what is going on here. If you are,
So let me ask you this. Let me
Go
ask you
for
with
it.
this. So how can you trade, let's say, without rules? Because there's some, like, I think, framework, some structure where you don't need to necessarily have big rules. So how do you manage that exactly?
So it's what traders do. What I found they do, they just get so rigid and focus on the rules, but the rules don't work. Their rules don't work in this market. That is what I mean, where they can't blindly follow the rules. And I know there's this thing out there, you need to follow your plan until your plan works again. The reality is that most traders don't have enough funds to keep following their plan and keep taking their losses until the market is back to what works and suits their system. That's what I'm saying. It is dangerous if you become rigid and say the market needs to work with my rules, because it doesn't. Does it make sense?
Yeah. So one thing I heard and one thing I really believe is the fact that good traders are kind of, average traders. They trade their plan forever. Down, they have these bad periods, these good periods, and the great traders, they trade their plan when their plan is supposed to work and when there's the right condition to trade their plan. So that's a big difference. And if you don't know when to start, when to stop, that's where you become kind of a good trader and not a great trader. So that's a big difference.
Exactly. And as Tim says, you got to be balls deep 24/7, 365. I know he says it with a tongue in cheek, but it's also where you then say, I need to learn how to survive and thrive in those markets, because otherwise, how am I going to learn? I can't just say, oh, the market's not perfect for me and stop trading because I need to keep paying my rent, right? So it's about knowing when my system, what I currently have, works and doesn't perform, when it does perform and when it doesn't perform. And when it doesn't perform, I sit it out until the markets adjust again. But it's also about finding then another system, something else that works in this market, because I need to keep performing and I need to fine tune what I'm doing. Yeah.
So how do you assess when things are not working? Is it like a clear point? It's like, oh, it's not working, shift that, or no?
For me, it's a very clear point, because I have my system is written out very clearly, step 1, step 2, step 3. I'm a reversal pattern trader. So if you look at what happened last Friday in the futures market, the Dow was just like, and even the DAX, they were just charging ahead, right? So there was a reversal pattern on the 15-minute. Can't remember. So let's say it was the 15-minute. And then, thanks, Tim. And then the 15-minute reversal pattern failed. I was like, okay, it failed. That's all right. got out at my loss. Then there was another reversal pattern. So it was charging ahead up, and then was short entry. I went short again. It failed again. So now I know that the market is in an impulse lag. It's so strong, impulsive, charging ahead, that reversals don't play out. It keeps failing, the reversal pattern. That's when I know my system doesn't work. So that's one indicator. Another indicator is the velocity the market moves with. You could see on Friday it was so strong. It was just charging ahead. The bots were like in full working mode. That I also know when I feel the velocity of the market that my reversal patterns don't work. So what it is now, I need to look at what can I do to go with the flow, because again, at my core, I'm a reversal pattern trader. That's when I perform best. But if the reversal patterns fail, I need to stop doing that really clearly. If it failed twice, there is something in it. And for the reversal pattern to play out as well, the market needs to slow down. Yeah. So when you go to a mountain and the car drives up the mountain, then it slows down and then gets velocity again. But what the futures did, it went up, got to a plateau, and then went up again. Plateau, went up again. And when you understand to read the market this way, then you know what works and what doesn't work. On the flip side, all the trend traders, they didn't perform in the last few weeks because the market was going up, down, up, down, up, down, and there was no trend at all. And every time you thought it's now starting a trend, bloody bots came right back in and pushed the market back up. Or, Trump was tweeting something, or reporting came out in the US, and the market just charged ahead. So when you start reading the market in the big picture, as well as in the small picture, and you assess if your system works or not, that's then what you do.
Yeah. So this is part of it's going to be analyzing the market, looking at what structure it is, what trend they are. But I feel like the biggest part is going to be to look at your result and analyze your result more than the market, because your result tell you whether you do things right or not, and whether that works or not in the market.
They go definitely hand in hand, yeah. Because your results, that's your window. It's your eyes into what's working, what's not working.
Yeah.
Without the results, you wouldn't know, right? Yeah. Cool.
Wonderful.
Cool.
I want to get to a question by Mohammed about the exponential strategy I've been working on these past few weeks, and it's not done yet. I would love to share it and love to give you the result, but it's not completed yet, and I'm still backtesting on that for it's kind of a side project. So in the coming weeks, maybe it's gonna go out and it's gonna be more complete, but for now it's still in development. Yeah.
Chris has a good question. How you adjust your ability to read the market? What work do you do? So for me, what I did, and that was years of work. What I did was I studied every trading strategy that was out there. So I studied Elliott wave. I studied pattern recognition, price action, support resistance, so supply and demand. That is. GAN, everything that I could find, I studied, because what they are is they all are different ways of looking at the market and reading the market. It's like speaking a different language, but expressing the same thing. So if I say I'm hungry in English, or ich habe Hunger in German, or Etienne could say it in French, we all express the same thing, right? But it's different language. And so that's the same with the strategies, with the methodologies, I should say, not strategies. So I studied them until I understood them. I really, really got them. So that was step one for me to learn to read the market. What was missing for me in there was that this is really detailed. And so I started studying macroeconomics as well to understand the big picture correlations of the markets. Partly the reason why the DAX is so strong is because the euro is weak. Why is the euro weak, right? So we looking at those correlations, also how is the yen related to the equity markets? How are the bond markets related to the equity markets? That has been enormously helpful for me to get an understanding how the markets move and why they move the way they move. Is it necessary? Nah. I know traders, they purely trade off moving averages. They go long after moving average crossover and short after the other moving average crossover. That's all they do, and it works for them. Doesn't work for me. I don't know why. So whatever it is that works for you.
Yeah. But
That's
at some point, to clarify that at some point I feel like you had to, because you can learn like 1,000 patterns, 1,000 ways to see the market, but at some point you have to focus on a few of them to really apply. And I don't know how you did this. Is it like the one you felt most comfortable with, or maybe the one that worked the best?
what I did is I picked pieces that really resonated with me. So I like what Chris says. When the market changes the language, I change too. That is so true. Exactly. Because so if you look at candlestick patterns, they don't work in trending markets. That language I cannot use in trending markets. They work wonderfully in what's it called? What's the name again, Etienne? Help me here.
About what?
They work wonderfully in sideways markets, right?
Oh, yeah.
Choppy
Okay.
markets, yeah. So that's a different language I then need to use. That's an answer to Chris's question or Chris's comment. What I did is I took bits and pieces of everything and created my own strategy, the one that works and suits my personality. For example, I love bearish and bullish engulfing patterns of a supply area or resistance area. I love dodgy patterns outside Bollingers. Love that, right? So I studied Bollinger Bands, and the only piece that I took out of learning how to trade with Bollingers was when I have a candle reversal pattern outside the Bollinger. That's the only way I use it. Oh no, actually that's wrong. I use it another way where I say on the 4-hour chart, as long as my DAX is above the middle line of the Bollinger, I stay long. If it is below the Bollinger middle line, I stay short. The reason why I like Bollinger more is than moving averages. I find they adapt faster to my price. Moving averages, they seem to be lagging more than Bollingers. I don't know why, but that's just what I experienced. That's why I prefer working with Bollinger Bands. So that's the one piece that I took out of Bollingers. Another piece that I took out of moving averages, I use an 8 open close that I learned from Jack Bernstein. If they are far apart, those moving averages, and I have a reversal pattern, there's a high probability that my reversal pattern is going to fail. Because if I have an 8 open close, 8 open moving average and an 8 close moving average, and they're far apart, that shows me that price is still strong. So that helps me to protect myself from failing double tops or double bottoms. I use stochastics, but the only way I use stochastics is in combination with a double top or double bottom when I have a divergence pattern. And there's many different ways how I can use stochastics or MACD, but it doesn't resonate with me. I can't see it. But this divergence thing with combination of a pattern, I totally get that. Yeah, totally get that. So that's how I created my own system. And also, staring at charts for all those years, I have a lot of unconscious competence as well, where I just look at the chart and I say, can't tell you why, but it doesn't look right.
Yeah. So it's kind of like you feel it.
Yeah.
That takes time. Like you cannot just feel that in a month or something. So yeah.
No, yeah, and that's experience. You can't buy experience. So yeah.
Have you ever been getting to a point like Sharon is commenting in the chat where you kind of put things too complicated and then you have to go back to more simple?
Again. Again was extremely complicated, and I was so determined to make it work. And then I'm like, what for? What for am I trying to make it work? And yes, I did scale back. And I have several monitors, and on one monitor I have only naked charts, so no indication, no indicators at all on it. And they do look different to when you have an indicator on it.
Yeah.
So when I have my Bollinger Bands on a chart, I only need Bollingers when the price is outside the Bollinger. I don't need it any other time. However, I need to keep it on my chart so that I know when it goes outside, right? Otherwise, I wouldn't know. So comparing my charts that are just only price action with charts where I have all those crazy indicators on it, that helps me to keep it simple as well. Because now I can pick, it's like, here I've got an entry, here I've got an exit. And everything in between, I just delete out of my brain because I have my charts on this monitor where it's just blank.
Is the purpose of having these like naked chart with no indicators just for you to identify support resistance areas, or is it just for you to see and look at the chart?
Just so, because I find that indicators, they distort the charts.
Okay.
And that's why I have the naked charts where it's not distorted. That's the only reason. And also to train my mind, because I want to get away from indicators as much as possible. So that's my transition. That's one of my goals that I have. And Tim has a really good point. I know Tim. He's crazy dude who he codes everything in.
Oh, yeah.
I think it's Python, not R. I always get it wrong. So Tim can backtest 100 years of data in 5 minutes. And I've seen the power of it. And that is something that gives you confidence in your system. And you also know what the weaknesses are and what the strengths are. So Tim's system, I hope you don't mind me sharing it, but what Tim is more of a long-term investor with a pretty big portfolio. So what he does is he knows the system has never had more than 20% drawdown, even during the GFC, even during 87, the crazy times. That's what he knows from his back test. So going forward, as long as the drawdown is not bigger than 20%, he knows everything is healthy. Should it ever go beyond 20%, he knows that something has changed and he has to change as well. So I am totally useless when it comes to coding, so I can't do that. What is missing in the having the systemized trading and backtesting is you don't train your mind. So me backtesting, I'm not a big fan of backtesting. I'm too lazy, frankly. I don't backtest at all. Too lazy. I'm sorry. I forward test all the time. But me staring at charts and forward testing and doing those things, that's where I have this immense database in my brain.
Yeah.
And that's why I can say, I know something is not right and I can trust this because I know somewhere in a brain cell is this chart pattern that my brain has seen before and it knows what's going to happen on the back of it. And I trust that. Yeah, so that's the advantages and disadvantages.
That's a very good point. And some people, they just want to backtest to get, let's say, the data, but you kind of lack the mental picture of the chart, which is really important, I feel, also.
Yeah, definitely.
Yeah.
Yes.
Let's see. Good question from Chris. Do you want to answer that, Mandy? How long it took you to become profitable and consistent trader?
Can I do that? No idea. It will never
Okay.
happen. That's a fairy tale story. I don't know anyone who is consistently profitable. I know everyone who goes through times when it goes well and times when it doesn't go well. So even a friend of mine who is ex Goldman Sachs guy, he had 3 months of not performing. And he just sits there and works through it. It doesn't matter. He knows the system will take up again one day. It's an automated system in this case. And he does other stuff as well, not just this one. But that's, it's a fairy tale. The trick is to know, and this is why statistics are so important, why we need to know that I know my best performing months, which, by the way, has changed since Trump has taken over, because all my statistics are, the markets have changed definitely, and my statistics are not a clear reflection. But what it used to be was I would perform really well in March, April, February, March, April, my top months, and then again September, October, November, September, October, November. Those were the times when I had my highest performance. How do I know? Because of my statistics. It's black and white. It's hardcore data. It's nothing that I make up because I think I did well and I feel good during those times. None of that. And I know my best performing days, my best performing hours. I know not to touch gold. No matter how good gold looks, if I get into gold, I stuff it up. Can't trade it. I don't know why. It doesn't make sense. My statistics tell me not to touch gold. And this is how I became a DAX trader, because my statistics told me that I perform best in the DAX and the Aussie dollar. And don't touch pound yen. No matter how good the chart looks, don't touch it, Mandi. So I have those hardcore data. And I know that during the times, February, March, April, I focus on trading immensely. That's like going fishing when all the fish are out. That's like going from big wave surfing, traveling the world searching for the big waves, doing big wave surfing. The other times, I focus more on going on a holiday, having a good time, working on my coaching business, creating programs because I love that. So when you know when you perform best, then you can start trading with intention. And then you can really make the most out of your life. And that's where the consistency then comes in.
Yeah, that's a good one. That's kind of how I would answer it, but I want to ask you in case you had a different answer. But yeah, you could take any trader and see a period where it's like not consistent, which is like more consistent, profitable, which is making money. And it doesn't matter, it's like different periods. But yeah, of course it's going to be overall and stuff. But I think Chris has a really good point. So he says, for me, consistent, it's not about being profitable, but about being disciplined. So like being consistently disciplined, or most of the time, I guess. And that takes some time. And he says with discipline, the profitable part will probably follow, which is kind of right.
Yeah, that's my favorite topic.
Yeah.
Again, I don't know anyone who's consistently disciplined, because we are humans. And I see every single trader out there, and also trading educators, saying you have to be disciplined and you have to follow your system to the T. It's impossible. It's a standard you're not able to achieve that. What is so much more important than that is that when you make a mistake, you correct it straight away. You get into a trade because you were impulsive. It's like, oh shit, I got into the trade for the wrong reasons. Out. Get out, even at a loss. What most traders do is like, oh man, I got into this trade because, I got caught up in that jump up. And now it just turned around, I'm in a loss. How can I fix it? I need to find a way to turn this loss into a profit. And that is when traders get caught up. So if you shift your focus on adjusting your mistakes quickly, I guarantee you your results will change, and not trying to become this superhuman that doesn't make mistakes. Nah.
Yeah. And I believe one of the big part in that topic is to like track your mistake, track where you fall short, and what things you don't do right. Because if you track them, you can correct them over time, and you can kind of rank yourself on how good you are and how far you improve as well. So that's something I do all the time for sure.
Chris also has another question, right? Which is, you're asking really good questions, Chris. Thank you.
Chris. Love it.
So somebody told me it isn't worth to have a daily goal and amount of dollars. Just follow the process, trade the setup. If the market gives you the opportunity. What I think about that is, it sounds so perfect in theory. The reality is that most traders that I know, they don't have a system as yet that works for them 100%. That is the problem. And again, I used to believe that as well. Don't think about the daily goal in amounts of dollars when you have to start paying your rent for it. from your trading, you better start making sure that you make your money every day. And or not every day, but that you can pay your rent. So a hedge fund guy, friend of mine, he actually challenged me on that one. He said he has his daily goals and he makes it work. Funny enough, I found when I set daily financial goals, it puts me under pressure and I create the opposite. So if I have a daily goal of making $1,000 profit, I guarantee you I created $1,000 loss. That's just me, right? I'm not good at it, but he is like a machine. He just, he's like, he does his thing and it doesn't matter. And he does it until he gets what he wants. But he has a great variety of tools in his toolbox. He's very nimble, and that's why he can do it, because he knows there's like 3 or 4 different types of markets, not more, maybe even 2 or 3, and he knows what to do in which market. I guess that's why he's a hedge fund manager and I'm not. So yeah, like it comes down to whatever works for you.
Yeah.
Hello, Sasan FX.
What I see maybe work better is to have like a day, like if you day trade a daily, let's say, process goal where you want to implement this today. This is like what you aim for. And if you are swing trading, then you make it, let's say, weekly or monthly. But that's going to be your goal to do for that month or that week or that day, whatever. And then you can make sure to move forward with that. Because what happens, like, we often think like we have these things we want to get better at, but if you don't set goals to implement them, it's going to be very hard to get better at it, right?
Yeah.
So those daily, let's say, process goal can help you implement new things, and you track yourself on how good you are with that goal for that day or that week. That's what I've seen for some traders.
Exactly. So disputed items, why they don't show us the orders of other traders, but they see ours. I think we're missing one part here. Is there any free MetaTrader indicators that shows level 2? I don't think there is. Do you know anything that shows level 2, Etienne? I think Etienne froze. Ah, here he is back. And Etienne froze again. Okay. L2 comes from the broker, not from the software. Ah, that's interesting. Yeah.
Yeah. So, in between.
Cool. Are you back, Etienne?
Let's see. Better.
Okay, I think you're back. Test, test, test.
Yeah, okay, it's coming back now. Wonderful.
Ah, yeah, wonderful. Can't you back?
Good.
Yeah.
So what was the question? I think you guys asked me a question or something.
So the question was about L2, level 2 data. But yeah, the level 2 data comes from the broker and not from the MT4 items. From the MT4 broker. I lost you again, Etienne.
I think it's from your, so you maybe from see it, but you wouldn't know the whole picture. So I wouldn't be seeing this as useful anyway.
Sorry, I missed half of it. Can you just repeat it, please?
Yeah. So basically, this comes from your broker. So you would see maybe the data from your broker, but that's not the whole picture of the whole market anyway. So I don't see why that would be useful.
Yeah. And in Forex, it's not useful anyway because it's not centralized. Futures data, yes, exactly. You get it when you have a CQG or one of the professional platforms or a Ninja, but not on MT4. Yeah, where you don't trade the real market.
Exactly.
Cool. Do we have more questions?
Yeah, I want to talk a little bit about your program. So if you have any questions, comment below in the chat. We'll answer them right after. But tell us, interesting. I've been on the page, people looking at all that you have inside and all the contents. Tell people what that's about and what they can expect if they decide to join.
So I only heard half of what you were saying, so I just assume you're talking about the program. Just
Yeah,
disputed items. It's not the big guys that have full data from the brokers. It's you need to get to a broker who offers this data. So NinjaTrader offers level 2 data. CQG offers level 2 data. Traders Technology, but of course you pay for those kind of platforms. You pay much more. Cool. All right. So yeah, if it is okay with you guys, I'm going to share with you my new program that I just started. It's called the Fierce 10. It's a 10-week challenge, and it's all mindset related. So it's all creating the mindset for trading success, really, and with a goal to go into full-time trading. I've got all kinds of levels of traders. So from the trader who just started trading a year ago to the trader who has, and his goal is to trade full-time, to the trader who has been a full-time trader for the last 20 years. And his goal is to actually retire in 5 years' time from trading and just have a good life. So the training is called the Fierce 10. I'm going to try to share my screen if that's okay, Etienne.
Sure. And if you guys want to see the whole detail of that training, it's going to be linked below. Anyway, the first link in the description is going to be about that training Mandi is hosting. So she's doing some good stuff. So if you guys want to get more into that, then it's definitely recommended.
Cool. So it is designed where you create your trading mindset from the basics, right? It's like when you create a trading strategy or a trading methodology, we do the same for our trading mindset and start with setting yourself up for trading success. To design your journey and how to get to your goal of full-time trading or whatever your goal is and what you need to take care of. So most traders, they only look at creating a strategy that works for them. But you also need to look at having enough finances, having the support of the family, knowing which markets to trade, what happens if you get sick. If you have kids, if you have family, you need to do different things than if you are trading on your own and you don't have family to take care of. You can be more risky, right? So, then talking about self-sabotaging patterns, and I explain why they happen, what causes us to do self-sabotaging behaviors, and then also, of course, how to overcome them. Using self-coaching techniques, because my goal is not to keep you stuck with me for the rest of my life and your life, but to give you the tools and strategies so that you can keep them for the rest of your life and not just apply them in trading. It's really universal tools that you can apply for everything in your life. Emotional intelligence for traders. What does it mean? How can you use your emotions to propel you forward and to make you a better trader rather than needing to suppress your emotions because they you believe that they cause you to perform poorly? Then there is something about empowerment. So many traders, they feel at the effect of the markets. They feel, the markets have control over them. And we need to shift that that you're in control of your markets, that you're in control of yourself, the self-management, the mastery of your mindset. And that goes into, the mind matters, how to talk to yourself, how to manage your emotions, how to think. So that, again, that you make really good decisions, trading decisions. What is a good trading decision anyway, right? So most traders don't know what a good trading decision is. They only know that they have made money or lost money. Then there is certain keys to trading success. I have profiled hundreds of traders, if not over 1,000, and I can see the clear difference between traders who perform well and traders who don't perform well. And I call them the 5 keys to trading success. If you know what it is that the successful traders are doing, then you can model that. You can do the same thing. And so you can, it's on highperformancetrading.com.au. That's the website. And these are all the details. So what the advantage of the program is that these modules are recorded. So that means you can access them from anywhere in the world at any time in your own time, and you have lifetime access to those recordings. And then we have a Facebook group as well where you can ask questions. And I love the Facebook group because instead of me answering the same questions over and over again, one person asks the question. I know there's always someone who asks the question, and then I can answer the question for everyone, and everyone can get involved with their version of challenges that they need resolved. And what comes with the training as well is that my friend Tony Sycamore, who is also an ex-Goldman Sachs trader, prop trader here from Sydney, he offered for anyone who joins the program to get access to his report for free for I think for 1 month. So that is a bonus. Then I'm going to have successful traders sharing their story in the group on how they became successful. So it's not so much about what they're doing right now, but what their journey was to become successful, that we can learn from, that we can model. So that helps you to, instead of finding your own way, you can just do what those successful traders did as well. And so there's 3 levels to it. The level is where it's the gold program, where you only get access to the recordings in the Facebook group, and it's $297 US. You can join the platinum program, which is access to the group mentoring as well, and where give additional trainings as well tailored to what your individual challenges are. And that's $997. And then the third one is the mastermind, which is $5,000, where I do one-on-one coaching as well. But I think the best value is really the platinum program, where I can work with you really in detail. And the advantage of the group is that we can all learn from each other. So yeah, that's just in really short what the high performance trading Fierce 10 group is about. And yeah, if you're interested in, check it out. Drop me a note. Would be awesome to work with you guys. And Etienne put the link underneath, I believe.
Yeah, of course, it's always cool. So we had a few more questions, but I think just to get back to this, I think, well, first of all, I've tried Tony's report a few months ago, and I really like learning really love the details in them and everything that's there. So if you guys are not sure exactly how to trade, how to look at the market, I think this is good. I think it's not only for Forex, but for other things as well, but Forex included, which is kind of good as well. And every time I work with Mandi, I always get something new and I always get something where I can develop. So for me, it's always good. And I'm pretty sure Mandi's going to deliver value on what she offer. And that's going to be awesome as always. So a few more questions. I know, Mandi, what you want to tackle here. I've seen one about Yamkela, about different strategies. So the principle is the following. You can backtest something, it's going to work well on one pair, but less on the other pairs. So your job is not to trade on all the pairs if it doesn't work well on all the pairs. Like, you don't want to get your profit taken by the losing pairs. So either you develop multiple strategies or you trade only the pairs that work, and that can be a way to do it. Like, some strategies work well on 1 pair, 2 pairs, 5 pairs, 10 pairs. It varies all the time. And so you trade what works, and that's about it.
Well, you see, that's a really interesting question as well, because I know traders, they have their strategy and then they apply it in the market where the strategy works. So today it might work on the Aussie dollar, tomorrow it might work on the pound yen, and the day after tomorrow it might work in the DAX. So let's say if you have someone like me, trading reversal patterns, I would look for, let's say, a double top formation that has to fulfill certain rules for me to take that double top. Including how the moving averages have to perform, how my stochastics has to behave as well. Now I can take this thing and try it on different markets. I can try it on the Aussie, the Euro, the pound, and then all the other crosses on the DAX, the Dow. So I scan the market for where can I put my framework, where does it fit for me to trade? And then I know traders, they only trade the euro or only trade the DAX, and they know this so well that they have 3 or 4 strategies for this one market, because they know there is different behaviors, different movements at different times, where we have 3 types of markets, where we have a impulse market, up or down, where we have a sideways market, and where we also have like what I call a creeping market, where it's slowly creeping its way in one direction. And when we know that, so this is my DAX, he can behave in 3 ways. I need to then assess what kind of market do I have. Do I have, let's say, the impulse market? For an impulse market, I have this kind of strategy to trade. Whereas for a sideways market, I have this strategy. So if we look at cars, right, in Germany, not so much here in Australia, but in Germany, we have summer tires for when it's summertime. And then when winter comes, we have to change them to winter tires. Because when we have to drive during dry spells as well as snowy spells, we want to have an all-weather tire. Whereas in summer, we don't need to have a tire for snow. And so this is the 2 kind of traders that I have come across so far.
Yeah. And you mentioned a good point, which is the fact that if you find it easy to create a strategy for one pair, you might as well create multiple strategies for the same pair and trade only one pair. That could be a way to do it as well, which I didn't really dive into, but could be a good good thing to think about.
Yeah, and don't need to, like, as I said, I know traders who only work one strategy religiously and they're doing really, really well. It's just whatever suits your personality.
Yeah. Cool. Love it. Anything you want to cover? Because I have to go grab lunch. It's getting already 1 p.m. here, but anything you want to finish with?
That's a really good question. So as a big framework, when the markets are challenging and you are getting frustrated as a trader, the goal for you is to look at 3 different areas. Number 1, is the system that I'm trading suited for the markets? Or do I need to change that? So as I said before, I love reversal patterns. That's my strength. On Friday night, 2 reversal patterns failed, and I knew the market is not suitable for my strategy. Or sometimes it is all fine, markets work with my strategy, but I am not performing for whatever reason. Had an emotional upset. So I was just working with a trader before I came on here, who she lost a friend 3 weeks ago, unexpectedly. Friend passed away. And that was upsetting for her, right? So of course she didn't perform well. And it's understanding that in those times we need to give ourselves a break. Or it could be something simple where we just have a time where we don't sleep well. Yeah, it does need to be something grave, but whatever it is it us who's not performing? And again, our performance statistics tell us, is it the market or is it us? And then the third we need to consider, so the third area is where has something profoundly changed? And that is what I said before, since Trump came on board, the markets have profoundly changed for me. And I needed to really change my strategies, needed to change my behavior, and needed to add a few more toolbox to my strategy. Or, when you look at Europe now with that new rule that they're going to implement 50 to, what's it called? The margin leverage, 50 to 100 leverage, where here in Australia we have 500 leverage. 500 to 1 and 50 to 1. So UK used to have 500 to 1 as well. Now it's 50 to 1. That means you need much more money now to trade. And that could be an emotional stress as well. Where before you needed 50 pounds to put on a DAX trade, and now you need 600 pounds. That's massive. So then you have to grow as a trader and get used to that number. as well as adjusting your strategy. So yeah, these are the 3 areas that I would suggest you look into when you have a challenging time. And those markets are tough. So yeah.
Yeah, perfect. Like, if you have any question or any topic you want us to cover, comment below in the comment section after this is finished being live, and we'll make sure to cover them in the maybe coming weeks, or we'll see how that work out. But thanks for watching, and we'll see you guys pretty soon.
Thank you.